How high will gold go? History tells us that we're not even close to the top. And not only that, but gold's recent surge in price is just the beginning of what some are calling a commodity supercycle, one that will last years, if not decades. And those who are not paying attention to the signs will be left behind, risking everything.
Gold, yes, gold is hitting new highs. Investors, buyers, and sellers are all taking notice.
We expect central bank buying to continue, and physical demand, we think, will remain resilient even as prices continue to rally.
So today, we'll look at proven patterns to answer what's going on with gold, the stock market, why this time is so different, and most important, what is coming next so that you can protect yourself. Now, during periods of easy money, stocks and riskier assets tend to perform well because investors have extra cash, they feel confident, things are trending up. And during periods of economic uncertainty, during downturns, people are risk adverse, which means that they flock to safe haven assets like gold to protect their wealth. History tells us that both of these cannot be true at once, yet the stock market continues to reach record highs while gold continues to reach all-time highs. So what is going on? It means that one of them is undervalued and one of them is overvalued, inflated and going to crash. Now, we're going to look at both, but tell me what you think. If you had to guess right now which one is overvalued, gold or the stock market, tell me your guess in the comments below. Let's look at this chart that compares commodities to equities. Commodities being oil, grain, gold, anything that's tangible, a commodity, versus equities, of course, being the stock market. So if we look at this chart, I've already added a couple of events here, but anytime we see these peaks happen, that's going to be where we can assume the commodities value was high compared to the stock market. Anytime we see these little dips, that's where commodities value was low compared to the stock market. And we're going to explain why this is important to understand as we look at today and what's coming next. So starting on the far left, it makes sense that in the early 1970s, we had this rise in commodities. Inflation was increasing, there was the oil crisis. People were concerned, so they were moving towards safe haven assets like gold to protect their wealth, moving away from the stock market. Then we kind of have this period where we see some up and down, a spike here leading into the Gulf War, again, makes sense. And then what happens after 1990? Well, we start to see things trend down. Why would that be? Well, it's because things were good. People were making profit, which leads us to the dot-com bubble. We see here commodities compared to the stock market were at an all-time low. Why would that be the case? Because people had a high appetite for risk. They saw all the profit that could be made and they rushed to put all of their savings into the stock market. Now, of course, that did not turn out well for a lot of people, which leads us to a natural rise back in this chart up until the great financial crisis, where once again, people lost everything in the stock market and flocked to safe haven assets like gold. Now, what happens here? Why is it that around this time, we start to see this really go down? Well, it's an era of easy money. Rates historically low, near zero, right? Right up until 2020. And then rates go up, but it's shocking because even with rates going up, we don't really see a big rise, right? The last 4 years, if we look right here at where we are today, things are still low. What does that tell us? It tells us that commodities are undervalued compared to the stock market, which is clearly overvalued. Now, I'm not sitting here and telling you that people aren't out there making profit in the stock market. But what I am telling you is that where we are today is lower. Look at this. It's lower than where we were during the dot-com bubble. This means that commodities are severely undervalued compared to what's going on in the stock market, which tells us, if we look at history, that what's coming next, we can expect commodities to shoot right on up. So again, when we're talking about a commodity super cycle, this is what we mean. It means that they are due. They are due to go up, and it is only a matter of time given where we are today and what we are seeing globally. And we will talk more about what is happening with gold globally, but first things first, globally, if we look at the stock market, In the US, the biggest 10 companies account for 18% of the value of the global equity market. 18%. If that does not tell you that there is a concentration problem, look at this. 18%, I don't know what will. And when was the last time that we saw this happen? If we drag this across, that would be the mid-1970s. And again, what was happening during the mid-1970s? We had rapid inflation. We had people flocking to safe haven assets. We had people losing their savings. So to be honest, this tells me it's only a matter of time because the market concentration is not sustainable. And that's not all. We have concentration in the S&P 500 that the Magnificent seven different stocks are accounting for a third of all growth. That tells us that if one or two of these companies were to go under or something happen to their profits, we are going to see a serious decline. And when did all of this start? Let's see here. 2020, right? We have this huge influx of cash, of easy money, the printing press going overtime into the economy. And what happens? Well, here we go. A ton of growth. Again, not seen since the 1970s. Was there this much market concentration? Was the market so heavily reliant on just a few players? And that's not all. I'm just getting started because we haven't even talked about what is going to happen to gold and why we are so confident that gold is just getting started in this commodity super cycle. So as we can expect more market volatility from the stock market, what can we expect to see from gold? Well, here we have a chart that I pulled of gold's spot price. Now, I went ahead and circled a couple of peaks here because essentially what experts have been waiting for is for gold to break out of its trend line. So I'm going to go ahead right now here with you and draw this together. And essentially what people look at is when does gold break out, right? We have these two peaks that everyone has been measuring. The one that happened back here in the 1980s and then one that happened in the 2010s. So as we see this trend line, we see this big cup formation in the middle, and then we see another one, and everyone was holding their breath, waiting for it to break out of the trend line, which is exactly what happened a couple of weeks ago, following a 44-year wait for this to break out of the trend line. What happened once it did? Well, there are naysayers out there who claim, we don't know what's going to happen. Maybe it's going to go back down. But here at ITM, we have been saying this for years, that we knew once it broke out, it was going to go straight up. And what's happened? Look at today. This is just in a couple of weeks, straight up, which means that gold is just getting started. And it's no wonder that it's just getting started given everything that's going on globally. We have inflation concerns. We have geopolitical concerns, the war in the Middle East. We have the BRICS bloc alliance, who just had their BRICS 2024 summit aimed at de-dollarization, chipping away at our purchasing power. We have our own government printing records amount of debt with no signs of slowing. And the question I always ask everyone is, do you think all of those things are going to get better? Do you think that suddenly we're going to stop printing cash? Do you think that suddenly President Putin is going to decide that he no longer is interested in de-dollarization? He doesn't care about his sanctions? No. If you think that these things are going to continue, which they will, we have a reason why gold is going to continue to go sky high. There is a global move towards commodities. People are seeing it as the future. It's why central banks are buying gold at record amounts. It's why there's talk from other countries about having commodity trade centers. It's because it's clear that fiat currency days are numbered. The system that we live in is broken. I bring it back to the charts we just looked at. You want to make sure that you are protected somewhere that is undervalued, that only has room to go up, not somewhere overvalued that is clearly going to be experiencing increased market volatility, putting you and your savings and your future at risk. That is what I want for everyone. And for those out there who are saying, it's too late, you should have bought gold 5 years ago, I disagree. It's not to say that it wouldn't have been great if you bought gold 5 years ago, but it is not too late. We can see the trend line. We can see that we broke out. We know that these factors are going to continue to play a role in gold's climb. And again, you don't want to be sitting here 5 years from now and reading the comments saying, oh, you should have bought in 2024, because it's not too late. Now is the time to protect yourself against everything that's coming. And I'm not trying to be pessimistic too when I talk about all of these factors globally happening that aren't going to change. I'm optimistic, but I'm also a realist. And what I would never want is for blind optimism to prevent someone from taking action to protect themselves today against what's coming tomorrow. So if you are concerned about any of this, or this opens your eyes, or you've been waiting because you're not sure if now is the time to make a move, talk to a member of our team who can help you. They have years of experience in helping people just like you make sure that they're protected for what's coming next. It's really easy. All you have to do is call us at the number below, or click the Calendly link in the description and set up a time that works for you. And as always, I so appreciate you being here. Education is key. If you have anyone who could benefit from this, please feel free to share the video. And make sure you're subscribed, because there's a lot more that's going to be coming on this topic, I'm sure, in the coming days. So thank you again. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.